I'm Georgia Alfredas.
And I'm Dave Mathews, and this is What's Next, Wall Street.
So this is a show about winning trades.
Yeah, we want to help you learn about trading in a fun, entertaining, and most importantly, a useful way.
So we're going to talk about all the hot new trending products and services that you'll not only want to use, but probably invest in.
We'll also cover the fundamentals of those companies to make you an informed trader and make it easier for you to target investment potential. Plus, we'll share our thoughts on where the charts and indicators say a particular stock is going.
All this info can help you create a tailored trade plan and stay up to speed on what's next on Wall Street, so that all you got to do is stack those gains.
But we want to hear from you. You can email us at OptionsPlayers.com or hit us up on social media at What's Next Wall Street with your questions. We can also direct you to instructors and experts over at Options Players who dig into those trading funky fundamentals.
Yes, sirs.
All right, let's go to Stock Minute.
Yeah.
Robinhood is ready for its IPO July 29th as yet another financial oddity of 2021. Fresh off the heels of its $70 million settlement with the Securities and Exchange Commission. Now, $57 million of that is for fines for problems, including system-wide outages, no big deal. That means people wanted to trade and their system was locking them out.
Oh, that's all?
Yeah, that's it. Well, the other $13 million is for clients in the form of restitution, which probably doesn't even amount to the money that they lost on the GameStop insanity.
Yeah, crazy.
Well, recently on their roadshow, they were answering questions while trying to rally sentiment before their own shares hit the market. In fact, Robinhood expects more than a third of all their IPO shares to be diamond-handed by their meme stock fan base.
So for you newbies and me, diamond-handed means people hold a position with reckless abandonment. But wait, their meme stock fan base is the very same group Robinhood was accused of neglecting for other meme stocks.
Right? Ironic, huh?
Yeah.
Wait, it gets even funnier. During their roadshow Q&A sessions, the questions being asked to their CEO, Vlad Tenev of Robinhood, and the IPO were like, what's your favorite planet? Which he gladly answered Pluto. Is that even back to being a planet again? Or I can never keep up with that little guy.
Yes, according to NASA, Pluto is a planet again. Meanwhile, thanks to the internet, social media, and smartphone access, stocks are evolving. So we're going to continue to see non-traditional players like this in the marketplace. You know what else? Robinhood didn't even offer its investors IPO access before going public. So Robinhood makes more than 80% of their revenue from order flow data. So basically, they take your order info and sell it to those who can execute it faster than you.
So they're stealing from the poor and giving to the rich. Isn't that nice?
Isn't that backwards? Oh, the irony.
Well, on the positive side, Robinhood has a massive customer base. At last count, 18 million, which is a huge jump from just over 7 million that were reported last year. The company's also managing about 80 billion with a B dollars of assets. So instead of what's your favorite planet, the question should be, how do you plan to monetize your ecosystem above and beyond payment for order flow?
Yeah.
It's going to be fun to watch, though, as it is expected to be one of the largest retail allocations ever and a direct listing to boot. So that means they get to keep all those monies.
Wow, all those monies.
Today's What's Next Wall Street pro tip is brought to you by OptionsPlayers.com. Now, goals are the lifeblood of successful traders. Did you know that if you gain $500 a week from your trades, you'll accumulate $26,000 a year in additional revenue?
Okay.
Yes, that's just one trade for a $100 gain per day, and you've got that BMW payment just about covered.
Okay.
When you break things down to incremental goals, then you will find that success is easily obtained. We suggest you keep a log of your trades and review them to see what's tangible as a weekly gain goal. Once you've determined this, you can stay focused on what's needed to achieve that daily, and boom, you'll have less stress and better results. A trader without goals is a lost trader, Georgia.
Okay. All right. Oh, no, I don't like how you were just real personal with that. I'm super excited about our next guest as it makes a great follow-up on the goals and planning front. So I got a chance to talk with NBA veteran, prolific seed funder, and all-around cool guy, Anthony Tolliver. Now, he's a contributor for a new book called Foundation for Financial Excellence. Here's a little bit of our conversation. I am so excited. Anthony, thank you so much for coming on the show. I want y'all to welcome NBA veteran Anthony Tolliver. I'm so excited to see you. Hello.
Hello, how are you?
Now, I know this doesn't look like this is like your home. It looks like you're someplace cool.
Yeah, we're in the Dominican Republic right now, so
So
came down here
jealous.
for a few days to hang out. So
So fun.
enjoying it.
So fun. All right. So, we thought we'd bring you on the show because you are kind of like a financial guy. And I know that your wife, I mean, I'm going to say it's you, but really, I know that your wife, Jessica, is really, the brains behind your financial success. So I'm just going to go ahead and put that out there. Okay. So there's this book.
Pretty much.
Yes, there's this book, Foundation for Financial Excellence, Lessons from the Pros, a game plan for the collegiate athlete. And you are a contributor on this book. Tell me why you decided to get involved in this book.
Well, it started out as an interview. So Ryan hit me up and wanted to interview me about it. He had heard that, I had some pretty good success off the court and was doing good financially, making good decisions. And I was also the treasurer of the MBPA. So it started with a conversation, and then he said, "Hey, would you be willing to be a part of this book?" And I said, "Absolutely. It's something that I'm really passionate about, financial literacy, and and I've always wanted to write a book or be a part of a book at least. So it kind of hit a couple areas for me. So we made it happen."
So, as an NBA veteran, we hear so many stories. There are these guys who they make it big, male and female, they make it big, and then all of a sudden they're broke. There's so many really sad stories like that. Tell me what you think is the biggest mistake that someone like yourself, like a sports person who's made all this money, what's one of the biggest mistakes they've made?
I think getting the wrong team around you is a huge mistake. Listening to the wrong people is a huge mistake, which, it's hard to know that. It's not something you just automatically know exactly who to listen to, but I think it's just a combination of different things. You can, make some really bad financial decisions in investments, and that can be really poor. But I think the biggest cause of athletes going broke is just people not realizing how these contracts work, how much in taxes you have to pay, and then they get used to a certain lifestyle, and it's hard to go backwards. It's hard to spend $10 million a year for 10 years and then all of a sudden only spend one or two. But it's really easy to do the opposite. It's really easy to go from $1 million a year, and up. So I think that's a big part of it is guys and girls, they don't do enough smart investing, safe investing from the beginning to build their foundation. And then after that, some poor decisions on lifestyle. And I think that's kind of the combination that gets people in trouble.
So, we're talking about people who make millions of dollars. And is this book for everybody? Like, can I read it? Am I going to get something from this book? Or is it really kind of just, for millionaires?
Yeah, well, I mean, honestly, it's really geared towards college athletes more than
Love it.
anything, right?
Love it.
But the thing is, the principles in this book apply to anybody and everybody, with millions of dollars in the bank or $0 in the bank. The principles that we talk about, the things that we talk about, it's really financial literacy and being able to use sports as a vehicle to help people understand financial literacy better. So whether it be individual examples of people making poor decisions, individual examples of people making great decisions, they're all in this book. And also just different examples and illustrations to help simplify some of the things that are a little bit more complicated, like credit and identity theft and different things like that can really affect you financially for the long haul. So just kind of utilizing sports as a vehicle to bring more clarity to these subjects is kind of the basis of the book. But anybody can learn from it. Anybody from I would say middle school age and all the way up through however old you are. If you don't understand some of these concepts. Yeah, 27, 28,
Okay.
whatever.
That's awesome because I really cannot, like, our book just came today. We ordered it from Amazon, and I want my 15-year-old to read this because I'm like, dude, I can't take care of your whole life. You need to build good credit right now. He's like, Mom, how am I going to build good credit? You got to do it. So let me ask you this: how are you investing with bonds, with crypto, stocks? What's your favorite way to invest?
I'm a big proponent of diversifying my portfolio. So I kind of have a little bit of everything. My foundation though is in real estate. My thought process is this: is no matter what type of industry is booming right now, no matter what type of things are going crazy, crypto, Bitcoin, Dogecoin, whatever it is, people are always going to need a place to live. So no matter what technology looks like, housing is never going to, it might morph and change some and have some, but there's always going to be sticks. There's always going to be concrete. There's always going to be roof shingles. There's always going to be a place where people can lay their heads. Might get smaller, might get bigger, might get more dense, might get less dense, but all at the same time, there's always going to be places for people to live. So my foundation is in real estate, but I do tech investing. I dabble a little bit into crypto, but that's just kind of for fun more than a serious piece of my portfolio. Stocks, bonds, all that stuff, kind of traditional stuff. I have advisors that help me with that stuff. But I'm a venture investor. I've actually done quite a few investments in startups, like Big Blanket, and just recently just sold a piece of that company. Just recently sold a piece of another one of my companies. So, kind of, I really do like the startup life and the, finding that niche and trying to explore it and push it forward.
So, okay, I know you got to get going. I thank you so much for your time today because you're on vacay. Okay. So I want you to get back to your vacay, but what is the best piece of advice that you can give to a college kid, senior year in college? You got that great job, or you got this great, you're going to the NBA, you're going to the NFL, or you just got an amazing job. Best piece of advice you can give to someone. Actually, anyone.
Yeah, anyone. I mean, once again, the things in this book really, like I said, can be applied to anyone. So, but somebody coming out of college who's secured a great job, first of all, congratulations, because that's not easy. But anybody coming out of college, you're starting to maybe make more money than maybe you've ever seen. Don't get too comfortable with that amount of money and spending that amount of money. What I would say is always the general rule of thumb: if you're making 30,000 or 300,000, is live below your means, and save first. But it's not just saving. You can't save yourself to financial freedom. You have to invest at some point. You can't really invest, when you got a couple hundred. I guess you can on like Robinhood or something like that. Yeah. But really just save and invest, and look at it from the long haul, and always live below your means. So if you get a raise, say you're getting $50,000 and then you get a raise to $75,000, and then you're only living on $20,000 a year. Okay, maybe give yourself a little bonus. Maybe you go up to 25 or 27, but save the rest, invest the rest. Don't change your lifestyle drastically just because you make more money. Now that gives you more money to invest, more money to build with, and that's going to really help you in the long run. And I always say this too: enjoy yourself a little bit, right? Don't just be savers and investors. You got to go out, have a little fun, maybe buy yourself a nice present here and there to to keep it fun. Can't just be a penny pincher your whole life.
Right.
So you do have to enjoy it along the way, but just realize that just keep it responsible. Really, I mean, that's really what it comes down to.
Awesome advice. I wish I had this book when I was in high school. I mean, I really do, learn about credit, but also to learn about saving. It's really hard to save when, this is calling your name and this over here is calling your name. So thank you so much. Amazing advice. Can't wait to give this book to my 15-year-old. He needs it. And my 24-year-old needs it. So absolutely. I need it. Okay. My husband's going to be like, you need to read the book. I really do. I really do.
Let them read it. Let them read it first. And then after they get done, make sure you take a peek at it too. I'm sure there'll be a few things in there that you can help your situation as well.
Absolutely. Thank you so much.
Of course, no problem.
Wow, what amazing tips.
Love him.
He's so down to earth, too.
He's super down, like the nicest guy ever.
Wow. Well, thanks for hanging out with us today, Anthony. We look forward to checking out the book and seeing more of your work. Hey, why don't you subscribe and comment right below at Options Players YouTube channel and get a chance for yourselves to read and get a copy of this book.
Yes. Okay, so this is the part of the show where we get to hear from you. You can always hit us up on social media at What's Next Wall Street or email us at WNW@OptionsPlayers.com. Our first email comes from Shannon, who asks, exactly what is the taper tantrum and why is it such a hot topic right now? So my 7-year-old does. He doesn't get popsicles. So that's a great topical question here. Let's get a great topical answer from a topical lead instructor at OptionsPlayers.com, Greg Krause. I know, I'm cheesy, Greg. Hello, Greg.
Hey.
Answer that question.
All right. So, what is it's basically exactly what it sounds like to taper, right? So, what is tapering? Like to gradually lessen. But in finance, or what a taper tantrum is kind of a overreaction to that tapering. Or what I guess some would say is an overreaction. It might be the right reaction, so I'm not going to say it's overreaction. But really, tapering is like the first step when a stimulus program or a QE, I know that probably isn't going to be, QE is quantitative easing, which is a monetary policy to infuse more dollars into circulation of the economy. So basically a stimulus, right? So the tantrum really comes from, I think most people were worried about in 2013, I believe it was May, you had what was known as, was it Bright Wednesday? I'm not huge in the bond markets, but that's what it, yeah, all right. So on that Wednesday, so really what the collective reactionary panic to the Fed saying they're going to slow down on stimulating the economy through monetary policies such as buying bonds and other assets, which of course raise the price or raise the yield of a bond. And since bond prices and bond yields are inversely related, which means when the yield goes up, the bond price goes down, the people that are holding bonds start to sell, therefore makes the price go way down. And it makes the yield go up even higher. So it's an overreaction, quick spike in the yield. And some say we won't have it, but I really think the Fed is trying not to scare the public and give a good plan on how they're doing it. But that's the reason why, because we think we're about to start to see this tapering off the stimulus programs. So now it's just coming up in the news a little bit.
Got it. So I guess I can't say don't have a taper tantrum to my 7-year-old.
I don't think he'll follow it. All right, Greg, thanks for that info. Hey, our second email comes to us from Jim in Albuquerque, New Mexico. And Jim asks, what's happening with the China stocks on NASDAQ? You know, what is it? Baidu, it's Didi, and Alibaba.
Yeah.
Greg, you want to weigh in on these?
You still there? Okay.
Yeah, I'm here, Georgia, Dave. So I think it's the sweeping crackdowns that China and they've had on the technology industry in their own country, and just this week, I believe it was the education sector. So the education sectors was you're not allowed to have an education sector that makes a profit. So there were a lot of companies that came out during COVID, of course, for education, not just in China, but all around, right? But China has a lot of population, so they're probably doing a lot of revenue over there. But now they cannot make a revenue is one of the rules. And then you have other technology crackdowns. I think it was a few that were about to IPO. They had the crackdowns were like on personal information, security concerns, and things like that. So they actually removed their apps from phones and off the shelves, basically is what I would say. And it's really hurting them. The technology they're pretty much down a good 20, 30%. And then the education, I haven't even looked at those charts, but when it first came out, I noticed they lost almost everything. It's basically, when should you get into these in the Chinese sector? Well, I would say right now it is a sell and just wait and see what comes. All right. I would not try to guess the bottom here, because there's a few things that drive markets, right? You have consumers that purchase things. You have the reaction of the investor, whether or not they think it's going to continue to grow. And then you have government interference. And there's more reasons. But in this term, China has completely interfered with this. And I think it will hurt many of the NASDAQ listed or other U.S. listed companies. I think they'll go after them for maybe a little bit of regulatory and political clampdowns, if you would say.
That's a big change from what we're seeing here in America with our tech stocks. Our tech stocks are through the roof last week with record earnings. So that's pretty amazing to see the dichotomy of the two countries, or opposite sides of the world, I guess. So, hey, if you have a question, we have an answer. It may not be right, but still, you can always hit us up on social media with those questions at What's Next Wall Street, or email us at WNW@OptionsPlayers.com. Hey, Georgia, what do you keep in your phone?
Passwords, pictures. I mean, everything, really.
Well, do you remember when Jeff Bezos' below-the-belt photos were leaked to the Inquirer, New York Post, and other publications a couple years ago?
Yes, I do. You mean the photos that cost the richest man in America his marriage and half of his fortune? Oh.
That's right. Well, this was from a vulnerability in his iPhone called a zero-day attack. What that means is it's so new that a fix or a patch, an update, hasn't been made for it yet. Well, it turns out the governments, the Saudis in Jeff's case, and other rich people who have access to these governmental software, they can buy access from companies who create this type of software to unlock phones remotely, grab every bit of information that you store on them, and then send them back to their servers. You know, like your naughty photos and even who you've been texting or even calling and how long those calls were.
Oh my gosh.
Now, in Jeff's case, it was because of his owning of the Washington Post and a reporter that spoke bad about the Saudi prince from that publication. But it's now known other world leaders like the president of France and 50,000 other phones were on the list of targets. Now, forensic logs show that 23 phones were compromised by this, including reporters who need to maintain their sources of anonymity in order to protect lives.
Wow.
Now, the worst part about this, called the NSO hack, because that's a company that made it, and what differed from Bezos's hack, is that Jeff had to click on an attachment from WhatsApp. The vulnerability from NSO required only a user's phone number. Do you believe that?
I mean, that is insane. And the iPhone is supposed to be secure according to Apple's advertising, right?
Yeah, well, that's the stance they take, but these phones are so complex, and they have so much of our lives inside of them, it's nearly impossible to keep all the potential holes where data could escape plugged. But know this, if your phone's running hot and you blast through your data plan every month without streaming Netflix, then you may have a backdoor installed siphoning your data out to the cloud.
Wow.
Speaking of cloud, Amazon deplatformed, that is, pulled NSO off their servers this week. Now, they were silent from the last year when Vice found evidence of the NSO using their infrastructure.
Okay, is there anything that people can do about this? This is crazy.
Well, you're probably not a person of interest, as your reporting is mostly on the Free Britney movement.
Yeah, that's true.
But if you're into political upheaval, you need to pay attention to what goes into your phone. You may want to keep those social security numbers and bank routing information in a lockbox versus on your smartphone. You can never be too cautious because these companies are letting other people utilize this. It's called ransomware as a service in some cases, especially when it comes to private data around your identity, which could allow others to impersonate you and then ruin your credit.
Listen, if somebody steals my identity, they are going to be so mad. I mean, mad as hell when they try to open a line of credit with my credit score like 525. They're going to be like, what the hell? That's crazy. So, all right, I have 3 boys. So the one thing I know about is video games. Kidding. I know nothing about PlayStation, Xbox, Nintendo. If it's not Miss Pac-Man, Galaga, or even Frogger, I cannot be of service. However, I do have a Peloton, and this could make me a cool mom. Sources say Peloton is planning to expand its offering with a new video game. So that's according to a report from The Verge, which says the cycle maker is going to soon launch an in-app game they're calling Lane Break. Now, the game's going to reportedly work by having riders meet goals, which I never do on my Peloton, but I digress. So they're going to change their resistance levels and cadence, another thing I hardly ever do on my Peloton. But this report says it's going to be open to members only for a beta test sometime this year. So, however, there's no official word from Peloton yet, so we'll see what happens with that. I don't like to brag, Dave, but
Sounds like you're going to brag.
I'm also pretty savvy with the remote control. And now Netflix is unveiling more details about adding video games to their platform. So speaking of at a recent Q&A, Netflix executives said the games are going to be within their already existing platform. COO Greg Peters explained there won't be in-game purchases, just the gaming experience. So he also said, they want to be experimental when it comes to trying out a bunch of different games through different mechanisms. So Peters even said, someday we're going to see a game that spawns a film or a series.
So what's that? Art imitating art?
Yeah, I guess.
The thing, though, he did say about existing platforms is cool. That means you might be able to use your old Roku or Fire TV or Fire Stick to be able to play as well.
Yeah, super cool. I'm excited about that.
Yeah, let's see how this goes. Hey, everybody, we want to thank our guest NBA player, Anthony Tolliver, and lead instructor at Options Players, Greg Krause, for being with us here today. And remember, if you've got questions, we can try and help you answer them, and we would love to hear from you as well.
Email us at WNW@OptionsPlayers.com or hit us up on social media at What's Next Wall Street. I'm George Alfredas.
And I'm Dave Mathews, and see you next time on What's Next Wall Street, right here on this YouTube channel.